That's right. And Facebook was the one that investors said this is paying off. So we're going to look at that a little bit more loosely, and it paid off with stock gains. Twitter yesterday in its earnings said 20% expense growth for this year. That's significant boost that it's making. And when it says the health of its platform, what it's talking about is investing more in security efforts. It's trying to root out fake accounts. It's trying to put more money into making sure that fake news isn't spread on the platform. And ultimately, that's why monthly active users are declining. And it said that GDPR here in Europe was a huge reason for that. Interesting point, because we saw from Facebook that the number of users also went down because of GDPR, which is that huge piece of data privacy regulation. It did bounce back. So the question is if what these tech companies are doing now will ultimately weigh on their user bases going forward. How much effect will it have? And the action from Germany yesterday only seems to vindicate that more regulation might be coming on this.
Slowing Facebook down on their tracks, right? Because what we have seen has been almost a movement away from Facebook towards Instagram. And then what's Facebook doing? It's allowing that data to move then across different areas of the business where perhaps there should be silos. And wasn't that the ruling from Europe, that the silos need to almost remain in place?
Absolutely. The ruling was saying we cannot keep data merged between, Facebook cannot keep combining data from Instagram, WhatsApp, and Facebook onto its platform without consent from users. So it's saying a lot of users don't understand that when you sign into Facebook, your data is being spread across all different platforms, and that's being used to sell to advertisers. It's not sold to advertisers, but it's being used by all the different platforms that Facebook uses. So Facebook's saying, this isn't fair. It's not the antitrust watchdog's decision to decide if this is something we're violating their rules. Ultimately, they're saying this is up to the data protection commissions to do this. Unclear if that's going to play out, and Facebook is appealing that decision.
Two things here. One is the backlash that these companies are undergoing at the moment, not only over data, but also over content, which is, it seems to be, shifting the way people think about their pledges to do good. And I'll cite Instagram in this and the recent case where they've now committed to remove self-harming images from their platform. Why it's taken this long, God only knows. It's something clearly that they should have addressed a long time ago. But the other one is just valuation and opportunity here, because in the earnings, whilst we have seen some weakening trends, actually most of them are still demonstrating relatively robust growth. So as an investor, do you have to somehow disconnect yourself from the data and from the content issues and focus just on the numbers, or are the two linked?
That's the question that all the analysts are wrestling with right now, because revenue growth was strong for all of these companies, earnings growth was strong, but all of the signs point that there will be more hurdles ahead, particularly on this data protection and regulation front.
They're linked, aren't they?
And it's tough to say that that isn't going to affect the company, particularly when you talk about fines from GDPR, which are up to 4% of annual revenue. So there could be an impact there that we haven't seen in the past.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.